China abruptly cuts two key charges, withdraws coins from banking system. Shanghai. China's crucial bank abruptly cut a key hobby price for the second one time this 12 months and withdrew a few cash from the banking system on Monday, to try and revive credit demand to guide the COVID economy. Economists and analysts mentioned they consider Chinese government are keen to assist the slow economy through allowing a widening policy divergence with other foremost economies which might be raising interest quotes aggressively. The People's Bank of China (PBOC) stated it was decreasing the price on 400 billion yuan $59.33 billion of one-year medium-term lending facility (MLF) loans to some economic establishments through 10 basis factors (BPS) to 2.75% from 2.85%. In a ballot of 32 market watchers closing week, all respondents had forecast the MLF charge might be left unchanged and 29 had predicted there could be a partial rollover. The fee cut surprises us, stated Xing Zhaopeng, senior China strategist at ANZ. It should be a reaction to the horrible credit information on Friday. The authorities stays careful approximately increase and could no longer allow cross. New bank lending in China tumbled more than predicted in July whilst broad credit growth slowed, as sparkling COVID flare-ups, issues about jobs and a deepening belongings crisis made corporations and consumers wary of taking on extra debt. The PBOC attributed its flow to hold banking gadget liquidity moderately ample. And with 600 billion yuan worth of MLF loans maturing, the operation resulted a net 200 billion yuan of fund withdrawal. Market participants have largely priced inside the partial rollover because the banking device become already flush with cash, with interbank money costs hovering at 2-year lows and constantly beneath coverage quotes. Now with hindsight, state-of-the-art 10 BP reduce can be seen as front-loading earlier than the coverage room gets narrower going ahead because the PBOC sees structural inflation pressure, stated Francis Chung, rates strategist at OCBC Bank. The PBOC reiterated it might step up the implementation of its prudent economic policy and preserve liquidity moderately adequate, at the same time as carefully tracking home and outside inflation modifications, it stated in its second quarter economic coverage file. Despite the caution of inflation threat and flush liquidity circumstance, the dominating drawback risks under the COVID unfold and property sector rout brought about the PBOC to cut quotes to stimulate demand, mentioned Ken Chung, chief Asian FX strategist at Mizuho Bank. China's 10-year Treasury futures jumped greater than 0.7% in early change following the fee choice, whilst yields on sovereign bond for the same tenor fell about 5 foundation points. The principal financial institution additionally injected 2 billion yuan through 7-day opposite repos, even as slicing the borrowing price through the equal margin of 10 bits per second to 2.0% from 2.1%, in keeping with an online declaration. The PBOC reduced both fees by means of 10 bits per second in January, $1 equals 6.7425 Chinese yuan.